whatever that might be. Give me an idea. Where are our participants from? Thanks, Meredith, for leading us off. Tampa. My daughter and son-in-law and grandkids are down in Tampa. There's Franklin, Massachusetts, Scottsdale. I saw Atlanta go through there. Georgia. Awesome. Philly, Washington. Thanks for getting up early today. I guess you've already had a cup of coffee, though. Yeah, so a lot of different people. Saskatchewan. You may get the farthest away award. Not that that means anything in the virtual world today. There we go. Mexico as well. Wichita, Kansas. My wife was born in Wichita. Algeria. Wow, maybe that's the farthest away. Excellent. Orlando in California, South Carolina. Well, we've got a great variety of locations represented here today. Thanks for joining us. I love doing these. It's probably been about a year since I've had the opportunity to do this, and I can't think of a better company to focus on today than Costco. Costco is one of those companies, everybody's familiar with. Not everybody has one close to them, or they may have a competitor closer to them, so they may have joined one versus the other. But certainly, everybody seems to know Costco. Even as I do classes around the globe, it seems like everybody knows Costco. And of course, they are an international company. But one of the things I got to learn about Costco is that how truly international they are. Now, I'm going to start off with a couple of polling questions. The first question that I'm going to open up here is have you ever been to one of our Acumen learning classes? Our primary class is called Building Business Acumen. We do financial acumen classes. We do building business acumen for sales. We do building business acumen for just about any role within an organization. And so just want to see how many people may have had the opportunity to join one of our classes. Be sure and vote if you have the chance. These are totally anonymous, so we have no idea who's voting what. We've got a lot of people voting now. Let's see here. It looks like everybody's still voting, or got a few more people voting. Yeah, like to see the graduates come to our class. Like to see people who have not been through our class come as well. Let me share these results with you real quick. Let's see here. Let's see here. Looks like we've got about 40% of you have never attended a class. 34% attended a program already this year. We're about halfway through the year, so thank you. Some of you have attended a session last year, and some attended a session prior to 2021 as well. Let me thank you for that. Let me open up another one. And this one's similar, but let me just open it up there. Is this the first time that you've attended our webinar associated with these earnings call labs? First time I've attended? No, I've attended a webinar earlier this year, or no, I attended a session last year. Gosh, so far it looks like we've got a bunch of newbies that are joining us today. We really appreciate that. I'm going to count on some of the people who have been through one of our classes to help me out with some of the review that we're going to do associated with this. Let's see here. I'm going to just go ahead and close that poll. Looks like we're pretty close there. All right, let me do that. Okay, we'll let it tabulate just a little bit longer. But we've had a lot of fun with these, and we think we've gotten a lot of great feedback from our participants who have joined these. And it's amazing what you can do when you start looking at these earnings call labs and analyzing different companies, or just the same company. Once you do it one time or two times, you kind of get used to it, and then all of a sudden 3 or 4 times, and it's amazing how well you know the company at that point. Let me share with you here. Let's see here, 73%, this is your first time. So thanks for joining us. We've got a large representation from that newbie section. And then I'm gonna ask one final question before we move along too far. When was the last time that you actually listened to an earnings call, whether it was for your own company, whether it was for a customer or competitor, just a company you were interested in? Maybe you've actually thought about investing in that company, so you thought you'd listen to their earnings call. When was the last time that you listened to an earnings call? Some of you are probably going to say, I'd rather go to the dentist than listen to an earnings call. Yeah, we can usually think of a lot of different things that we'd rather do than listen to an earnings call. But I'm going to share with you a process and a tool that will help you listen to earnings calls better today. So let's close that one out real quick. Give it a little time to tabulate. We've come up with a great tool that helps with that. We talk about a lot of these tools in our classes, whether virtually or in person, and you'll get to see exactly what that tool is, or really it's a combination of tools, if you will. So let's see here. How do we do on this one? So 40% of you listened to an earnings call this year, 14% last year. So over 50% of you have listened to an earnings call in the somewhat recent past. And only 23% of you have never listened to an earnings call. And none of you would rather go to the dentist. So thanks for joining us here today. We may have another polling question or two at the end. Just a couple of interesting statistics as we get started here. 95% of employees at a company don't understand their company's strategy. That's one of the best reasons to listen to an earnings call, to learn the strategy of the organization. Typically, strategy is financially related. And so if we're going to have anything to do to have an impact on the financial success of the organization, and we believe everybody can have a financial success of the organization, you need to understand the company strategy. Otherwise, how are you going to make an impact? 90% of employees don't understand their company's important business metrics. You know what? There's just a few important business metrics, and I'm going to share a little bit more about that as we talk about our foundation for our classes and for this earnings call lab today. But basically, it's around our 5 drivers. So there's a few metrics that we all need to be a little bit familiar with. Now, let's go ahead and dive into Costco just a little bit. Craig Jelinek is the chairman and CEO. And let's imagine just for a second you're the CEO. Just a little bit of background information about Costco. Costco was founded as the Price Club in 1976. A couple of brothers with the last name of Price actually started warehouse discount clubs, and it was named after them, the Price Club. It was refounded in 1983 as Costco. Costco had started, and it was actually a merger with the Price Club. And as a brand, I kind of wondered, okay, how did Costco get its name? I could kind of see it just a little bit, but it kind of confirmed what I thought. As a brand was built on helping customers manage their personal costs, thus Costco, or the Cost Company. Currently, about 300,000 employees worldwide in 830 warehouse locations. Some interesting statistics too here. Costco sells approximately 150,000 rotisserie chickens daily. You got to go around the racetrack, as they say in Costco. You can't just go pick up a chicken at the front of the store and pay for it and carry it out. You get to go through the rest of the store as well. So that may entice you to buy a couple of other things while you're in there as well. And then Costco is also one of the largest pizzerias. With 830 locations, they sell a lot of pizza at Costco. We'll talk about a couple of other items that they sell as well as we go throughout here. Now, as CEO, when you're thinking about this earnings call, what do you need your employees to know? Y'all excuse me 1 second. I picked up a little cold, so got to take a little drink of water. So what do your employees need to know that would be important to relay to them in an earnings call? What do your customers need to know? What do you need your shareholders to know? And what do you need your partners to know? Costco has several partners that they work with as well. Some ancillary products that they work with. Certainly gas is one of those. They've got pharmacies in there. Eyeglasses and prescriptions that you can get for that. So a lot of different partners that they work with. Now, here's my guarantee. I mentioned this a little bit earlier. If you will do this tool that I'm going to share with you today, if you do it 2, 3, 4 times, you're going to get really good at it. The good news is it's also going to help you build your credibility within your own organization. It's going to help you build your career and your company as well. It's going to help your conversations both up and down the organization. As you do this 2, 3, 4 times, it is amazing how much you get to know the company. Now, 3 steps in our process: prepare, analyze, and apply. So let's talk about prepare first of all. Basically, a couple of things that you need to know about earnings calls. There's 2 parts to an earnings call. Now, part number one is around the prepared remarks. All right. Now, this is typically going to be the CEO, maybe the CFO. Sometimes the COO gets involved as well. There may be 2 or 3 or 4 people that actually participate in these prepared remarks, but they're exactly what it says. They are prepared. They don't get up there and just say what comes off the top of their mind. This is typed out, it's prepared usually days in advance. They have a marketing team, a communications team that's typically helping them with these prepared remarks. And it is exactly that. It is what they want you and I to know as part of this earnings call. And then part two is the question and answer session. So after the prepared remarks are done, there's usually analysts on the phone call. As a matter of fact, I don't know if I've ever been on an earnings call where there weren't analysts on there. Matter of fact, with Costco, there was, I think, about 13 different analysts on that. So this is an opportunity for the analysts who are covering that particular company, Costco in this instance. They're either recommending the stock or not. And so they have questions they want to have answered through the appropriate executives to figure out some of their curiosities about the company. The amazing thing is this question and answer session applies to this foundation I'm going to share with you here in just a little bit as well. So it's sometimes 20 minutes for prepared remarks, 40 minutes for question and answer. It may go 30, something along those lines, but usually about an hour-long call. Now, 3 things to do before the call. Number one is locate the call or the transcript. All right. So if you're obviously going to listen to the call, you need to know how to find that. Sometimes we get busy. That's understandable. Sometimes we may want to go back and listen to it again. It's usually kept on the website to be able to do that in the investor relations part of the website. Or we can also pull up the transcript for those calls. The transcript is exactly that. It's everything that was said on that particular call. So let me just share with you. I usually just go and I do Costco IR as an example here. And this will take me to the investor relations part of Costco's website. And then my curiosities are going to be around their webcasts and presentations and or their event calendar. So if I click on event calendar, this is what comes up. They report their sales every single month. You can see the dates here for June sales results, July, August, but then also more importantly, they've got their Q4 earnings results and Q4 earnings call coming up on September 22nd. Now, yes, we are actually looking at their third quarter. So their end of year is a little bit different from others. They actually ended in August of 2021 for their year. So yeah, we're taking a look at their third quarter results today. We'll look at the quarter and the year-to-date results. Now, if you want to pull up the transcript, you can see what I typed in here, Costco earnings call transcript. Well, there's a couple of different places that have it. Sometimes the company will actually have their transcripts on their investor relations website, but you can just about always find it either at motleyfool.com, which their website is actually fool.com, or Seeking Alpha is another great website which hosts a lot of different information around companies. And one of those just happens to be earnings call transcripts. So you click on that, lo and behold, you get to see the stock price there. You can see a lot of different tabs that you can actually click on for additional information around Costco. But if you click right here, Q3 2022 results, you get the earnings call transcript. It's about, 18 to 20 pages as a general rule, and includes the prepared remarks as well as the questions from the analyst. Excuse me. Now, number 2, in terms of preparing, things to do before the call. Review your notes from past calls. Well, wait a minute, Kelvin. I haven't done any past calls. I just mentioned that in the polling questions. What are you talking about? That's okay. You may not have notes now, but after you've had a chance to go through this, you'll understand the notes that you'll be taking during that call or as you're reviewing the transcript. So we'll talk more about that. And then finally, number 3 is meet with your team. Now, that team may be any number of different people. You may have employees that you work with that report to you. Maybe you all get together to listen to the call, to share your ideas about the notes that you take on that call. Maybe it's some of your peers. And maybe it's a sales team that you're interested in a customer and you want to get together and listen to that call with them so that you can compare notes and figure out how to sell to that customer better. So 3 things to do before the call. So we've prepared, we're getting ready to go into the analyze phase, and we'll talk about apply a little bit later on as well. Now, just to give you a brief review, this is the foundation for our courses. It's also the foundation for this call today, the Earnings Call Lab. These are the 5 business drivers we believe all successful companies focus on. Okay, cash, profit, assets, growth, and people. Now, cash, because it goes directly to the statement of cash flows, profit to the income statement, assets to the balance sheet, and growth. Haven't met a CEO or shareholder yet who wasn't interested in growth. And of course, it takes people to make it all happen. Now, those of you who have been with us in one of our classes or in another one of these earnings call labs, let's think about cash for just a second. Fill in the blank for me in the chat box, if you would. Cash is blank. Cash is what? What do you say in the chat box? Yeah, thanks. Cash is king. A company has got to have cash in order to be able to survive. We can survive without profit, but we've got to have cash. I love cash as a cash cow. Yeah, absolutely. Absolutely. Cash can be pretty and cash can be fluid as well. Yeah, so we talk about cash position. We talk about cash flow or cash from operating activities. As we think about cash, there's a lot of other things that we can get tied into in terms of cash as well. Now, let's see. Y'all did great on that one. Let me ask you a little bit tougher question here. When we think about profit, there's basically 3 profit metrics on an income statement or a P&L statement. Can anybody give me those 3 primary profit metrics? Now, sales certainly plays into it. Sales or revenues plays into it. We got to increase our revenues in order to be able to help these. Oh, look at this. We got net income, gross margin, operating margin. Those are the 3 exactly that I was talking about. A little bit different order that you see them on the income statement. It's actually gross margin first and operating margin next, and then net income is the bottom line on our income statement. Venus has taken it to another level. EBITDA. Yeah, EBITDA is earnings before interest, taxes, depreciation, and amortization. So when we look at operating margin or operating profit, that is considered to be EBIT. When we add depreciation and amortization to EBIT, that gives us our EBITDA. Crystal, great answer. Gross profit, net income. Oh, and earnings per share. We got a new one there as well. Yeah, so the 3 primaries that I was talking about was gross, operating, and net. Okay, and then we've also got EBITDA. We've also got earnings per share that we think about when we think about profit as well. In terms of assets, we talk about asset strength versus asset utilization. In terms of growth, certainly there is a couple of different types of growth. One where we grow from within, and the other one where we actually do mergers or acquisitions to help our growth, which would be organic growth versus inorganic growth. And then people. Who are the 2 primary people we think about as we think about the people driver as an organization? What do you think? Who are those 2 primary people? Employees, that's exactly right. And customers. Yeah, employees and customers are the 2 primary groups of people that we think about when we think about the people driver. So really what we're doing in our classes as well as today is we are looking at an organization, Costco today, on our earnings call lab through the lens of these 5 business drivers. All companies, large, small, private, public, for-profit, not-for-profit, they all focus on these 5 business drivers. And we believe the more successful ones focus on these 5 drivers even more successfully. So that's a quick review of our 5 drivers. We're going to start jumping into this just a little bit now. Now, here's part of the workbook right here. By the way, you had an opportunity when you registered to download this workbook. If you did not take us up on that opportunity, then you're going to have an opportunity toward the end of the class to download this workbook. But let me share with you how this workbook works. So number one is we've got an executive alignment activity. This is a great exercise, whether you're talking about the transcription for the earnings call, whether you're talking about the letter to the shareholders from the CEO, whatever. It's a great exercise to do to see what the CEO, CFO, whoever is talking, what they say about the 5 business drivers that I just introduced you to: cash, profit, assets, growth, and people. Now, when they talk about these drivers, they don't always say the specific words: cash, profit, assets, growth, or people. So you'll see here we've actually got some definitions for these, okay? And then we've also got some examples of words that they might use. So as an example, dividends or distributions. How do we pay dividends or distributions? Through the form of cash. If we do stock buybacks, a lot of companies are doing stock buybacks these days. Well, what do we do? How do we buy stocks back? We use our cash, right, to buy those stocks back. So if they're talking about those types of things, good idea, they may be talking about cash. Capital expenditures. Costco's got about $4 billion a year that they spend in capital expenditures. That's another example of cash. Working capital is a good discussion around cash as well. So those are some things that you might hear around cash. Profit. Profit, there may be, you all mentioned several of them just a minute ago: EBIT and EBITDA, net income, or earnings. By the way, there's 3 different things that you may hear net income referred to as: net income, net earnings, net profit. So why don't we have 3 names for the same thing? I don't know. Somebody didn't like one, so we got another one as well. Earnings per share, top and bottom line. So our top line is our revenue or sales, and our bottom line is our net income, net profit, net earnings, whatever those may be. So you kind of get the idea here. Assets, growth, increase or decrease might be a good reference toward growth. Expansion, innovate. I kind of like to think about innovate as a growth idea as well. And then people can include a lot of different people there as well. Payroll expense, customers, subscribers, any number of different people there. So now, there's also 4 questions we're going to focus on today. Which drivers seem to get the most attention and why? Which of these 5 drivers? What were the 2 or 3 main points the executives were trying to make? What are the goals, trends, and objectives going forward? And finally, what key questions or concerns were raised by the analyst community? So let me share with you some of my answers here in just a little bit. We're gonna play along that executive alignment exercise just a second. I want to get your help just a second. So I've got now. What's interesting, Craig Jelinek, the CEO, was not on the call. Matter of fact, I did a little bit of research, and typically Richard Galante, who is the CFO, actually does the call for Costco. I went back 4 or 5 years, and with the exception of this call, Q3 for 2022, Craig Galante has done it, but Bob Nelson, who is the Senior VP of Finance and Investor Relations, he actually was the one who led the call and ran the call, and he was the only one who talked and the only one who answered the questions. He started it off by saying, I'm sure Craig would like to be with you, Richard would love to be with you today, but he's actually in Italy on a delayed vacation. And so he certainly wished everybody well, and Bob took the rest of the call. Now, help me out here. In particular, this is a comment that came from Bob. Help me out. What do you think about which drivers apply to what is in bold here? We ended Q3 with 64.4 million paid households and 116.6 million cardholders. Both of those up over 6% compared to a year ago. Yeah, Jonathan's right on track there. Oh, some of you, sorry, you may have already said it before I mentioned it. Yeah, growth, certainly. People, right? So Paid households is people. Card holders, that's the Costco card, is Citibank, Visa card. Yeah, so growth, people, customers, I'm sorry, yep, customers fall into people. I think there's one other one, but I'll hold off on telling you that until we get through with what Bob said here. Now, oh, Liz got it. Good job, Liz. Nice to see you, my friend. Thank you. Yeah, Costco relies on their customers in order to be able to maintain their profit. A lot of the profit from Costco comes from membership. So nice job, Liz. Now let's focus on this next line. Our paid executive memberships were 27.9 million, and that's an increase of about 800,000 since end of Q2. What do you think? What do you think those go toward? Which drivers here? Cash, profit, assets, growth, or people? Yeah, growth and profit again. He's basically saying the same thing in each one of these particular sentences. And then finally, executive members now represent over 43% of our member base and over 71% of our worldwide sales. Wow, 70% of worldwide sales is the executive members. Yeah, so growth, people, and profit throughout that statement there. A pretty simple statement by Bob, and talking a lot about the membership and profit and growth, which we'll see here in just a little bit were the two main drivers that we're focused on in the call. Now, we'll also like to take a look at some questions that the analyst ask and where are they focusing their questions. This is Scott Cicerelli from Truist. He's a managing director and senior equity research analyst. He's on a lot of the calls that Costco does. I'm not going to bold portions of this. Just take a look at this and tell me which drivers you think apply to this one. You guys had some pretty good SG&A, selling, general, and administrative expenses, SG&A leverage, which helped offset the merchandise margin compression that you saw. Would you try to pass on more price increases to protect your gross margin if you didn't think you'd have as much SG&A leverage as you were able to generate? A little bit of cash, that's right, and profit. Absolutely, absolutely. Cash margin assets, I like that, Yvette, as well. You bet. Yeah, so profit, because we're talking about SG&A leverage. SG&A was really good. So in other words, they reduced their SG&A, which increased their profit. Typically going to be operating profit around that, or operating margin, as Shiraz said. Let's see, helped offset the merchandise margin compression. Yeah, so their margins compressed on some of their merchandise that they were buying due to raw material costs, transportation costs, a lot of different things. So basically you're saying, hey, listen, you improved SG&A, why didn't you increase prices? Let's see here. Looks like half the US is a Costco card holder. Good point. Good point. I hadn't thought about it from that particular perspective. So yeah, basically he was asking, why didn't you pass on some of the price increases? And I'm gonna hold that answer just a little bit as well. But yeah, I think you all have the idea on this. Here's what I counted in terms of cash, profit, assets, growth, and people. Sorry, I've got something at the top part there, maybe hiding the analyst questions. You can see I like to take a look at it from a prepared remarks perspective. That's the left numbers. And then the analyst questions are the numbers over here on the right. You're not missing a whole lot on cash. Cash was probably talked about less with Costco than maybe any company I've ever looked at. They've got plenty of cash, so why worry about it? And yet they were focused more, as you can see, they were focused more on profit and growth throughout the conversation. Excuse me, people as well. That was high also. But cash and assets, they talked about, but it wasn't a big part of their conversation there. So we're going to focus primarily on profit and growth, a little bit of people as well as we go through thinking about some of these questions. All right. Now, don't worry, you don't have to read these answers in here. I'm gonna highlight that a little bit more. So the first question is, which business drivers seem to get the most attention and why? I mentioned profit and growth. People, they certainly talk about a lot as well, both employees, members, customers, a lot of different people that they talk about it. But I'm going to focus primarily on profit and growth. Kind of interesting how they talked about that. But basically, you can see here, they discussed profit throughout the call, both in the prepared remarks and during the analyst questions. Net income for Q3 was about 1.3 billion compared to 1.2 billion last year. Now, that was in the first paragraph of Bob Nelson's comments. In the second paragraph, he said, I should have put this in quotes. He said, let's now review the metrics of our P&L. He literally went line by line on their P&L statement, talking about the good, the bad, and the ugly of net sales, all the way down through income before income taxes. He did not get all the way down to the bottom line net income, but he literally went through each line item. Sales, 52.6 billion in the quarter, up from 45.3 billion last year. Gross margin down 99 basis points due to core merchandise cost. It's costing more to run the business. It was down partially due to the sales mix. So they were selling less profitable items during the quarter. Higher raw materials cost and higher labor cost due to our new wages and additional day off. Yeah, so they actually had charges on their P&L that they showed that they have increased their wages at Costco, and they have just included an extra day off every year for every employee. It's basically like an additional floating holiday, and they can use it whenever they choose to or whenever they want to. So that certainly applies to the people driver because it's certainly playing toward their employees. SG&A down 84 basis points. That's a good thing, right? SG&A is an expense, so for it to be down 84 basis points, that's a good thing. Now, that's kind of like going from 2% down to 1.16%. All right, 84 basis points is what that stands for. The $77 million pre-tax charge, so it was not an insignificant number that we talked about up here with new wages and additional day off. Inflation. Certainly inflation could lead to either less profit or the opportunity to increase prices. And then membership fees, again, goes back towards profit. 984 million, up 9.2%. Talked a lot about renewal rates, total members, potential membership increases, and several other items around membership as well. Now, around growth, total revenue up 16.2% for the quarter and year to date. Yeah, actually, I did a double take on that one. I had to calculate those twice. It was up 16% for Q3. It was also up 16.2% for year to date through Q3. Operating income up 7.7% for the quarter and 19.1% year to date. So showing some good profit growth already. Net income 10.9 for the quarter and 19.1 year to date. Comparable sales or same store sales were up. Shopping frequency was up. Customers are coming more often. That was up 6.8%. Average transaction was up. Membership fee income was up 10.4%, and member counts were up as well. Opened one net new warehouse in Q3. So what makes net new? Well, basically they opened up, excuse me, 3 new stores, but 2 of them were relocations. So one of those was a net new location. They've got 17 new stores opened year to date, planning an additional 10 new in Q4 for a total of 24 net new warehouses in 2022. So they continue to grow their business as well. Now, obviously, those new warehouse locations, we would apply that toward assets, right? So you can see how we would kind of play along that. So that's the 2 main drivers that they talked about. Now, what were the 2 or 3 main points the executives were trying to make? Now, it was actually only one executive, Bob Nelson, but there were 2 or 3 main things that he talked about. I've kind of left the third one as a fun one. You know what? I'll go ahead and start with that one. Hot dog and soda combinations. Yeah, he actually included that as part of his presentation. He said there's been some incorrect information on social media and other places, other media outlets. He said, when we introduced this hot dog and soda combination back in the mid 80s, it was $1.50 to the consumer. Today's price is $1.50 to the consumer. And there are no plans to increase that price at this particular time. So there's a little bit of fun one there, but certainly important to a lot of different customers at Costco. Now, let's go back up here to number one, inflation versus increasing prices. One of the things I loved about what he said was it's all about the value proposition. And what I mean by that, what he meant by that, it's just because inflation has caused some challenges for us, it also causes challenges for our consumers. If we can raise prices and still be the number one value proposition in the market, yeah, we might do that. But typically, we're going to lag behind our competitors, and we want to have the best value proposition out there. So, an example of that, inflation causing burden on customers, he said. He said, we're not raising membership fees now. There was a lot of talk about that. There was a couple of questions from the analyst about that. They typically do that about every 5.5 years. Well, they're at about 5 years right now. So they're not doing it right now. He didn't say they wouldn't do it in 5.5 years, but based on the inflation and them having high regard for their customers, the people driver, he didn't really allude to when that might happen, but it's not happening now. Pressures from higher commodity prices, higher wages, transportation costs, that may be, they're getting stuff overseas. So that could be ocean freight expenses. That could be gas for trucks. And then certainly we all know about supply chain interruptions over the last couple of years. Let's see here. Looks like their mission statement is in line with what you were just saying. Continually provide our members with quality goods and services at the lowest possible prices. There you go. Absolutely. Absolutely. Thanks for that, Liz. Q1 inflation. They've tagged at about 4.5% to 5%. Q2 was about 6%-ish, and Q3 was about 7%-ish. And certainly out in the market, you might even be hearing higher numbers than that. Now, I think the last call that I did was Kroger. And Kroger actually talked about, at 2, 3, 4%, we can pretty much pass that along to the consumers and we're in great shape. Once you get up into 6, 7, 8% and above, it gets to be a little bit more challenging. Again, we want to be the best value in the marketplace. And one analyst actually asked the question, I probably should have put this a little bit later on, but would you ever think about testing price increases? Put it out there, see how the customer responds to it. And Bob said, no way. No, not going to do that. That's not our philosophy. We're going to do it at the right time, at the right price for the right reason. Number two, 3 main points the executive was making around membership. We've talked about how important membership is. We talked Q3 membership fees were $984 million this year versus $901 million last year, up 9.2%. Renewal rates, they are getting membership renewals in U.S. and Canada at 92.3%, which was actually about 0.3% over Q2. Pretty good worldwide, also 90% worldwide, both up from Q2. Hadn't really thought about this before, but it certainly makes sense, especially considering the lines to get gas at Costco these days. Oh my gosh, sometimes I decide I don't want to get gas, even though the price is so much better. But the gas value proposition is driving more memberships and more visits into Costco. Now, he made the suggestion that in some cases, some locations, you can get gas for $1 a gallon cheaper than out in the market near some of those locations. Mine's probably around 50 cents where I live, 50 cents per gallon, which is still a great reason to stop at Costco. He also mentioned that they're getting more members that sign up digitally. And he also talked about Costco Logistics, which is delivering a lot of those products as well. All right, so that's our 2 or 3 main points that he was trying to make. Now, what are the goals and trends and objectives going forward? Continued focus on memberships, continued focus on gross margin. if you think about gross margin for Costco, you can see here, they don't actually call it cost of goods sold, but that's kind of the generic name for it, but they call it merchandise costs is equal to 89.4. Almost 90% of their revenue is going toward their merchandise cost or cost of goods sold. And then some of those components include core merchandise, some of their ancillary products, and other business. LIFO, last in, first out from an inventory perspective, can have some impact on that merchandise cost as well. SG&A, this is their second largest expense right behind merchandise cost. So that's why they talk about profit so much. Well, let me ask you all this. I don't think we've said it yet. Is Costco a low margin company or a high margin company? I'll kind of distinguish those two here in just a second. Yeah, they're a low margin company, aren't they? 2.4%, I think, is the number. I'll share that with you. It's in that range anyway. So with 2.4%, you got to think about basically everything you do is about costs and increasing your revenues as well. So that's why they talk about that. They certainly want to focus on SG&A as well. Second largest expense. They've done a great job reducing that expense the last couple of years and maintaining those expenses. Some of that may be as a percentage of revenue. Warehouse expansion, certainly on a growth trend. They've got 14 coming up in the U.S. In 2022. They got 2 in Canada, 1 in Korea, Japan, Australia, Mexico, Spain, France, China, and the first one in New Zealand. China is actually scheduled to open 4 new locations between 2023 and 2024 as well. They did actually have one on lockdown for a few weeks just recently also. CapEx. We haven't talked a whole lot about CapEx. That's certainly cash, but it also applies to assets. Just under $4 billion projected for the total year this year. And then I mentioned Costco Logistics a little bit ago. They acquired a company called Innovel Solutions in 2020, and that's currently providing about 58,000 stops per week in Q3, primarily for the bigger and bulky items. But interesting, they said this is going to lower our cost of merchandise, and it also gives improved delivery times and service levels for our members. So again, thinking about those members there. Now, what key questions or concerns were raised by the analyst community? Trip consolidation or items per trip rising. Bob actually talked about how in the past, during COVID, people would come less frequently, but they would buy more, which we saw in a lot of retail operations as well. And certainly their items per trip were rising as they were coming less frequently. Now they're coming more frequently, and so their items per trip is actually going down just a little bit. Balancing the desire to show value while also passing on some price increases with inflation up 5 to 7%. Yeah, again, it kind of goes back to showing that value to the consumer. We're going to lag on our decision to do that. We understand inflation is up, and we're going to do it at the right time, at the right place. Yeah, Ron, inventory turn is absolutely critical. So that trip, number of trips, as well as how much they're buying at that time, certainly makes a difference. Are you seeing any pressure from rising fuel and diesel with regards to transportation? That's where you actually mentioned about the ocean freight certainly being up, and fuel costs are certainly making a difference. It was interesting, though. He said that typically, all that kind of blends into the cost that we're paying for the product anyway. So it's kind of like we get it passed on and we pass it on. So yeah, we are seeing some of that. Price increases and last in, first out around inventory turns. There was actually a very good article in the Wall Street Journal just a few days ago about the challenges of last in, first out inventory management, because with rising prices now, that can have some impact on profitability as well. So it's either last in, first out, or average inventory. So different options there. Number 5, this is kind of an interesting one. You said you were a little heavy in small clients holiday inventory, but you feel good about your ability to clear the inventory. They actually had a certain portion of inventory that came in after Christmas. So as they said, they put it in the deep freeze. I don't think it was food products. I don't know. They didn't specify, but basically, I think they said we've put it in storage. It's not going to be a ton of inventory that we're going to have to get rid of, but we think we can get rid of that. Let's see. Does Kirkland Products treated like separate operating company in Costco? How it enters here? It is. Well, it certainly runs through the revenue just like the other products that they are selling. Matter of fact, you can see Kirkland penetration rates here. Approximately 26% of their revenue globally is how I took that. So yeah, it's treated separately. Certainly, well, certainly. Sorry, it's not treated separately. It is one of the products that's in their store. Many products that are in their store, and it is part of their total revenue. But they do check to see how much Kirkland is penetrating the entire revenue. I thought this was interesting too. The fuel to store conversion rate, approximately 50%. So you go to the store, you buy gas. However, he did say that more and more people now, based on the cost benefit, the value of gas, a lot of their customers are coming, putting in 4, 5, 6, 7 gallons and driving off. They're just coming up to fill up their car. I don't know about you all, but the lines I'm seeing, I don't know that if I'm stopping, I want to get a lot of gas. I don't know that I want to stop for 4 or 5 gallons. And then finally, have customers shifted their buying habits? You can probably imagine this one. Year or two ago, year and two ago, customers were buying a lot of exercise equipment. They were working from home. They were buying office equipment. A lot of that's kind of past us now, and so they aren't buying that type of stuff now. And so now they're shifting to other types of products now that they're going back to the office. And so they have indeed shifting their buying habits. Kind of goes back to they're coming to the store more often and they're buying fewer items when they come there. So yeah, there is a shift in the buying habits. All right, we got about 12 minutes left, and I've probably got a lot of information I need to share with you still. This is what we call a Navigating the Financials worksheet, NTF. So if you ever hear anybody at Acumen Learning say NTF, you know they're talking about navigating the financials. How this is organized, you can see cash, profit, assets, growth. And of course, it takes people to make it all happen. We've got 2 metrics associated with cash, 3 associated with profit, 2 associated with assets, and 3 associated with growth on this particular NTF. In our when we do a class for our customers, we usually customize that to their metrics that are important to them, but similarly laid out. Now you can see here key metrics and equations. So as an example, let me just go down here to net profit margin. Okay, the 2 items we're going to look for on the financial statements is net income and total revenue. Now this may be net income, net profit, net earnings, whatever the case may be, but it's going to be one of those nets and total revenue. Our next column tells us which statement we can find these on. So either the income statement, the balance sheet, or the statement of cash flows. So in this particular example on net profit margin, both of those we could find on the income statement. Here is where you can do your calculation. You can enter the numbers there, do your calculation, and then here would be where you would put your response. All right, so we're gonna do a couple of these together, and then I'm gonna share the entire sheet with you to show how they have performed. So the first one, let me go back here. The first one is cash and cash equivalents. Which financial statement would we find this on? Income statement, balance sheet, or statement of cash flows? Thanks, Ron. Yeah, we're going to find this on the balance sheet. So let me pull up the balance sheet real quick. Cash and cash equivalents is usually the first asset that we see on the balance sheet. So how much cash did Costco have for their third quarter 2022, which entered on May 8th, 2022? What was their cash and cash equivalents? Yeah, 11,193 is correct. So the 63,852 is actually their total assets. Cash is one of those assets. So yeah, it's actually $11,193,000,000. These numbers are in millions. So we have to add 6 zeros to these numbers. Now, let me just point this out here as well. Short-term investments, a lot of companies will calculate into their cash short-term investments as well. These are investments that will turn into cash in a year or less. Just for consistency purposes, I'm just going to use cash and cash equivalents. So we're going to enter that right here on number 1. Cash from operations, we can find that on the cash flow statement. Now here's our cash flow statement. There's 3 sections: cash from operating activities, cash from investing activities, and cash from financing activities. Take a look here. How much is our cash flow or net cash provided by operating activities? How much is that one going to be? Yeah, thanks, Jonathan. 4,886. So we're going to enter that on line number 2. Total revenue. We can find that on the income statement. I'm going to go ahead and kind of go through these. So for the quarter, we're looking at the quarter first of all. Actually, let me ask you this question. What was our total revenue for the third quarter, the 12 weeks ending May 8th, 2022? See, that's why I wanted to ask. A little bit of a trick question. Yeah, so net sales, which looks like it's on the top line of the income statement, was 51,612. But guess what? We've got membership fees in there as well of $984 million to give us total revenue of $52,596, $52,600,000. Okay, $52,600,000. So I'm going to enter that 52,596 here on total revenue. Yeah, you got to be careful on that total revenue side because you may miss out on a little bit of revenue there. I've even seen some companies do the 3 or 4 or 5 different lines to get total revenue. Now, our net income, it's on the income statement. We're going to take our net income attributable to Costco, which is $1,353,000,000. We're going to enter it there. Guess what? Our next net profit margin is our next one. And we just got those 2 numbers. So I don't even have to go back and look at the income statement for that. Matter of fact, I'm going to go ahead and enter those. So 52,596. Whoops, I got those backwards. Talk about a typo. 52,596, 2.6% in terms of net profit margin. I'm going to go ahead and just fill out the rest of these. You can see Q3 22 versus Q3 2021. Yeah, very low margin, isn't it? Very low margin, but consistent year after year after year. Pretty consistent in terms of cash, a little bit less in terms of cash from operations. Part of that was that extra inventory we talked about earlier. Total revenue, you can see some nice growth there. Net income grew, but stayed consistent in terms of net profit margin. And then let me just go down here. You can see the kind of growth that they experienced in 2022 for the quarter. Now, I'm going to go through this one as well. This is Q3 year to date versus Q3 year to date last year. Again, good growth both in Q3 year to date this year as well as Q3 last year. And then finally, I compared Costco to Walmart year end to year end, the most recent year end. So end of August for 2021 for Costco and end of January for 2022 for Walmart. Let's take a look here. Similar cash numbers, quite a bit more cash flow. Total revenue, they're about 3 times larger at Walmart than what Costco is. But look at their margins, basically the exact same, 2.4 to 2.6. Walmart's growth, not quite as fast as what Costco's is, but think about Walmart's at $572 billion in total revenue. They've got to increase 1%, almost $6 billion that they've got to do. Now, we got a couple other things we need to do, and I'm running out of time here. My apologies. First of all, we're at the apply stage here. A lot of people have actually applied what we've taught them in 30 of the 50 companies that we've taught. These are some of the results that we have achieved. 84% improved the performance of their business or function. 81% increased collaboration throughout the company. 77% improved upward communications. Wouldn't it be great to talk to your boss and their boss and their boss about business acumen? 77% improved employee engagement, increased business focus, improved teamwork. So a lot of the results that we get out of that. Now, we want to apply. So what are some of the insights that I got out of this? Number one, Costco is a well-oiled machine which performs consistently year over year. I love their approach around the value proposition. They don't raise prices just to raise prices or just because their costs go up. They know they're going to make it up sooner or later. But if they can create value and be the low value provider in the market, they will raise prices. I've always heard that if it weren't for memberships, Costco wouldn't be profitable. And that is largely true, but not completely. You can see here for fiscal 2021, their membership fees were almost $4 billion, but their net income almost $5 billion. So there is a strong correlation there. I thought it was interesting too. Costco only has about 4,000 products that they sell. Seems like a lot, but when you look at most grocery stores, that can go anywhere from 15 to 60,000 stores. And I always knew Costco was an international company, but didn't realize that 30% of their stores were actually outside the U.S. in 11 different countries. Not many variety, but useful ones only there. That's exactly right. And they know how to buy those products. They've got great vendors that they're buying it from as well. So what are three actions that I'll take? Consider investing in Costco. It's a great company. Continue following Costco's results on a quarterly basis using this workbook. And I got to try out their hot dog and soda combo. I buy their hot dogs all the time, but I've never tried one in the store. And their pizza for that matter as well. Now, let me just go ahead and do this. Let's think about these three things to do before the call. Locate the caller, the transcript. What's number two? Does anybody remember what number two is? And then number three is certainly meet with your team. Review your notes. Great job, Rebecca. Yeah, so hopefully you're going to review somebody and you're going to, that's right, we need to prepare as well. You're going to have notes for your company, or here's some different people that you could analyze. The company that you work for, a company that you sell to or compete against. Maybe it's a company that you partner with or invest in or just interested in. Or maybe it's General Mills. Why General Mills, Kelvin? Well, that's the company we're going to analyze next month. And so come back and maybe you can fill out this worksheet on General Mills and you can see how your notes compare with ours. Now, oops, sorry about that. So if you're interested in getting a copy of the workbook, you can go to this acumenlearning.com/webinar to download the workbook. You can also get $100 off the individual online training if you would like. And then our next call is scheduled for July 27th, and that is General Mills. Hey, thanks for the interaction today, the engagement today. Costco was a fun company to do. You know, I don't know about you all, maybe I said this before, but I can't go into Costco without spending at least $500. It's no wonder they're successful if there's a lot of people like me out there. So I'm going to stick around for several minutes. Me and the Acumen Learning team will stick around and answer any questions that you may have. So stay on if you'd like. My pleasure, everybody. Thank you all for all the nice comments there. Thanks to see, nice to see some of the familiar names out there as well. I appreciate that too. I think I'm on the mend right now. So it was, the good news is it was nothing bad. I've been out walking the last few days. I just try not to talk as much. Do companies release their 10Q statements around earnings, or do they release them later? Yeah, typically you can get the 10Q day of or day after the earnings call. The 10K, which is the annual report, takes a little bit longer. The 10Qs are not audited. The 10K is. So it may take 2, 3, 4 weeks to get the 10K out. I think they actually are allowed a couple of months, but usually they get them out within about a month. So great question. But yeah, 10 Qs you can usually get day of, day after, maybe a couple of days after, worst case scenario. All right, any other questions? I got a question privately. What's the best way to purchase Costco stock? Is it dollar cost averaging options at over $472? It's pricey. You know, I don't want to give too much stock advice because I'm not a stock advisor. I do have people who actually advise me on most of the investments that I make. I guess what I would suggest to you is that I've gotten to a point where I may not be able to buy as many shares, but more costly or pricey stocks don't scare me away like they used to. If the fundamentals of the company are there, and they've certainly, been around since the mid '80s and is still successful and continue to grow. I might not let that scare me off just a little bit. Dollar cost averaging is typically a good way to go because you're going to get it at its highs and its lows as well. I'm not a big options trader, so I would hesitate to even give you any advice or even comment on that. So yeah, that's kind of my 2 cents. All right, thank you. Thanks all. Any other questions? Ginger, are they able to come off mute and ask questions, or do they still need to type those into the chat box?
They need to still type them into the chat.
Okay, that's what I was thinking. Thank you very much. All right. Well, thanks for joining, everybody. Thanks for your engagement. Thanks for helping us out there. Have a great rest of the day, and we hope to see you next month, if not in classes before that. Take care.